Unveiling the power of market depth, the top of book's influence on price movements. Introduction. Hey there, fellow traders and enthusiasts. Welcome to this comprehensive dive into the world of order books and their profound influence on cryptocurrency price movements. In this script, we'll explore why the top of book, market depth level 1, is the epicenter of price action and how closely monitoring liquidity movements at the best bid and best ask levels can give you a competitive edge in the crypto markets. Chapter 1, Understanding the Order Book. Section 1.1, The Basics. Let's kick things off by understanding what the order book is. In essence, it's a real-time ledger of all buy and sell orders for a specific cryptocurrency, organized by price levels. The order book is divided into two key components, the bid side and the ask side. The bid side represents all the buy orders at various price levels, with the highest bid being the most attractive price for buyers. The ask side represents all the sell orders, with the lowest ask being the most attractive price for sellers. Section 1.2, Order Book Structure. The order book's structure resembles a pyramid. At the very top, you have the highest bid and lowest ask prices, the top of book. As you move down, you encounter progressively lower bids and higher asks. Each level displays the price and quantity available for trading at that particular price point. Section 1.3, Order Types. Orders in the book can be of different types, including market orders, limit orders, stop orders, and more. Market orders are executed immediately at the current market price, while limit orders are placed at a specific price, waiting to be matched with an opposing order. Chapter 2, Market Depth Level 1, Top of Book. Section 2.1, Defining Top of Book. Market Depth Level 1, often referred to as the top of book, showcases the highest bid and lowest ask prices in the order book. These two price levels are the closest to the current market price. Section 2.2, The Significance of Top of Book. Now, here's the real gem, the top of book heavily influences price movements. Why? Because it represents the immediate supply and demand dynamics. When there's a discrepancy between the best bid and best ask prices, it can trigger significant price shifts. Section 2.3, Impact on liquidity providers. Liquidity providers, often market makers, play a crucial role in maintaining a vibrant order book. They profit from the spread, the difference between the best bid and best ask prices. By continuously adjusting their orders, they ensure that there's liquidity available for traders looking to buy or sell. Chapter 3, Price Movements and Liquidity. Section 3.1, The Dance of Liquidity. Price movements in the cryptocurrency market are like a dance between buyers and sellers. The top of book reflects this dance in real time. When a large buy order appears at the best bid price or a large sell order at the best ask, it signals strong demand or supply. Section 3.2, Order Book Heat Map. Imagine the order book as a heat map. The intensity of colors represents the depth of liquidity at various price levels. The brighter the color, the stronger the support or resistance. Traders often use these heat maps to gauge potential price reversals or breakout points. Chapter 4, The Trio of Data. Section 4.1, Best Bid Trio. Price, the best bid price. Quantity, the volume of orders at the best bid. Timestamp, the time at which the best bid was placed. Analyzing this trio of data allows traders to assess the strength of buy-side support. A higher quantity indicates a more significant level of interest at that price. Section 4.2, Best Ask Trio. Price, the best ask price. Quantity, the volume of orders at the best ask. Timestamp, the time at which the best ask was placed. Similarly, the best ask trio provides insights into sell-side pressure. A substantial quantity on the ask side suggests a barrier for price advancement. Section 4.3, Time Analysis. Timestamps matter. Monitoring the time when significant orders are placed can reveal the urgency and intentions of market participants. A sudden influx of large orders can indicate a strategic move by institutional traders or whales. Chapter 5, the Meta_Quant 4D Map Order Flow. While we can't directly access specific data from Meta_Quant's 4D Map Order Flow, it's worth mentioning that advanced tools like these provide traders with detailed insights into order flow dynamics, offering a deeper understanding of market movements. Section 5.1, Meta_Quant's Approach. Meta_Quant's 4D Map Order Flow likely combines price, quantity, time, and another dimension, possibly order size or order type, to create a multidimensional view of order book activity. This holistic view can help traders identify hidden patterns and correlations. Section 5.2, the Power of Visualization. Visualization tools like 4D maps can make complex order flow data more digestible. They may use color coding, animations, or 3D representations to convey real-time market dynamics effectively. Chapter 6, Practical Applications. Section 6.1, Trading Strategies. Understanding the top of book can lead to various trading strategies, such as scalping, trend following, and momentum trading. Let's explore each in detail. Scalping. Scalpers thrive on small price differentials. They closely monitor the top of book, aiming to profit from rapid price changes by executing numerous trades within a short time. Trend following. Traders who follow trends often rely on the top of book to identify entry and exit points. When the best bid consistently rises, or falls, it can signal an uptrend, or downtrend. Momentum trading. Momentum traders jump on board when they see significant shifts at the top of book. A sudden surge in buy orders can indicate positive momentum, prompting them to buy in anticipation of further price gains. Section 6.2, Risk Management. By closely monitoring the best bid and best ask, traders can implement effective risk management strategies, including setting stop-loss orders and take-profit levels. Section 6.3, Arbitrage Opportunities. Arbitrageurs look for price discrepancies between different cryptocurrency exchanges. The top-of-book data helps them identify profitable arbitrage opportunities when the best bid on one exchange is higher than the best ask on another. Section 6.4, Sentiment Analysis. The top-of-book can also provide insights into market sentiment. A sudden shift in the best bid or best ask may indicate a change in sentiment among traders, which can be valuable information for decision-making. Conclusion. In this script, we've unraveled the critical role of the top of book in driving cryptocurrency price movements. It's not just about knowing the price, it's about understanding the supply and demand dynamics at the best bid and best ask levels. Remember, trading cryptocurrencies involves risk. And it's crucial to combine this knowledge with a solid risk management strategy. So, there you have it, the proof that the top of book is at the heart of crypto price action. Keep exploring, keep learning, and may your trading endeavors be profitable and rewarding. Thanks for joining us on this journey into the exciting world of order books and market depth analysis. Happy trading!